Investing can be an emotional roller coaster. The fear of making your first investment, the highs when your positions are up, the lows when your positions are down. The biggest mistake you can make in long-term investing is allowing your emotions to dictate the decisions you make. But how the hell can you overcome all of these intense emotions? That's what today's video is all about. Hi everyone, I'm Sam. Thank you so much for tuning into our channel where we are all about achieving wealth and financial freedom through a three-part strategy. Earn more, spend less, and invest the rest. Anybody will tell you that the secret to success when it comes to investing in the stock market is to buy low and sell high. Now, that is beautiful in theory, but in reality, it is much more difficult to actually do. Just take a look at the CGM Focus Fund as a perfect real-world example. Back in 2009, they were the world's top performing fund. They achieved an annualized return of more than 18% a year for a period of 10 years. Here's the crazy part. The average investor in this fund actually lost 11% per year during that same time period. How can that be? Well, when the average investor saw their returns going up, they got excited and they invested more money into the fund.
I'm jacked.
I'm jacked to the tits!
Good.
And then conversely, when they saw their returns going down, they got nervous and they pulled their money out of the fund.
Give me my money back. Give me my money back.
In other words, they were letting their emotions control their investing decisions. In our experience, there is only one reliable way to overcome this fatal mistake. Develop a process and stick to it. The process you develop depends heavily on the type of investor that you want to be. So the first question that you have to ask yourself is, how much effort and time am I willing to put into my investments? Most people fall into one of three categories: passive, active, and somewhere in the middle. If you don't want to spend too much time or energy researching your investments, that means you are a passive investor. Now, if you choose to go down the route of passive investing, a great technique for you to consider is what's called low management fee index investing. An index fund is a portfolio constructed to track a financial market index, such as the S&P 500. When you invest in index funds, you are essentially investing in the growth of the overall economy. You are very diversified and you aren't wasting your money paying high management fees. On the other end of the spectrum, if you want to have total control over your portfolio and you are ready to put in the time and energy to research your investments, a strategy you may want to consider is what's known as value investing. Value investing is the process of curating a small portfolio of companies that you carefully choose after researching them to make sure that you understand the business, know its intrinsic value, and buy shares of that company at a discount to its intrinsic value. Now, if you're somewhere between these two and you're working to become more of an active investor, a great strategy for you to consider is what's called the magic formula. The magic formula is a simplified version of value investing described by Joel Greenblatt in The Little Book That Beats the Market. It's a process of choosing 30 good companies that can be bought at a discount by using a really easy to apply formula that ranks companies based on their return on invested capital and price per earnings. In future videos, we are going to do deep dives into all of these strategies, so make sure you stay tuned. There are a lot of ways to be a successful investor, but no matter which way you choose, one lesson holds true. Emotions are the enemy to long-term investing, and in order to overcome them, you must have a process and you must stick to it. Before I sign off, I want to give you a quick reminder that I am not a financial advisor and I am definitely not your financial advisor, so anything that you see in this video should not be taken as financial or legal advice. All right, guys, that's it for me. Thank you so much for watching. I hope that you found this video useful. If you did, let me know by hitting that like button or better yet, subscribing to our channel. As always, we'd love to hear from you in the comments or to connect with you on our Facebook page. Remember, earn more, spend less, and invest the rest, and I will see you next time.